Hello, this is Vance, and this is Wednesday, November the 5th, 2014. And this is lesson 4 of 6 lessons, the slow hand method of price action. I'm going to show today's chart. I'm going to go over the method, things that we've already covered. If you looked at lesson 1, 2, and 3, you've seen many of the parameters with reference to the slow hand method. I'm going through this very quickly. I want to try to do this in less than 10 minutes. And hasn't happened that way yet, but it's just a real quick review of the slow hand method for price action. So let's get to it. So we've talked about these things already, some things. Trading channels, how I drew them off the swing highs and swing lows of the first, over the overnight. We talked a little bit about market context, whether it's a trend or a range, the two types, either the market's trending or it's in a range. We've talked about 3 types of trades, or what types of market context there is for the trades. There's with trend trades, a trend trade, continuation patterns, and reversal counter trend patterns. We briefly looked at that. That was the last in the previous videos. We talked about trading tight trading ranges, and it was really about buying and selling at the tops, selling at the tops and buying at the bottoms in real ranges, and use of limit orders. Well, I talked about limit orders, talked about stop orders, so that's what we're going to be talking about today. Types of entries, stop entry or limit entry. Now, the examples I have are based on second entries with in one case, counter trend, second entries, but it doesn't matter whether it's counter trend or whether it's second entries or not. What it really refers to is how you place your buy or where you put your sell on these 2 specific examples. So when that link that you have on your screen there, and I'll put it on the YouTube channel as well below, the link will take you to 2 examples of that I did in replay, just to kind of draw them up. Now, there are many more than that. It should just give you a rough estimate. And I'm going to try to talk briefly about targets and measured moves. And those are the things that we're going to talk about today. So let's get started. Already, the introduction took 2 minutes. So today, wow, what a day. I mean, it's going to have to really squish this down to get the whole thing on the chart. For anybody that you watched my channel or anything else, I've done demonstration trades, and quite frankly, for today, on November the 5th, if you look back for a demonstration trade and for the pre-market video, I showed the trade. I showed it right at the open here. Got my first 15 ticks off, came back and took me out. I just got 15 ticks on my 3 contracts. As you can see, it really got to this high and it failed from there. And so what I used for this, I used a limit order to buy into this one. I had my stop was just a little bit below this. I used a limit order, and you saw that. And in this particular case, it's really like 2 pullbacks to this area. First pullback, second pullback is really close to the high, and it was like prices. It's like a breakout pullback long, and because of the momentum was up to begin with, I felt that there was enough room at least to get my first contracts off. I was also looking at the fact that this looked like to be a measured move. So I thought that this measured move, now I'll talk about measured moves as well, but the measured move is when markets go up, if there's a pullback, it'll typically go up by about the same magnitude. So you can see the first move up, pulls back first time, pulls back the second time. You can see it was almost a perfect measured move. So that's the other section that we talked about. Measured moves as far as context is concerned. So I showed the target. My target was this measured move right here. Okay, near this top. Now, you didn't have all this other stuff. Well, prices got up here, and I was thinking that not only that, but it failed. And of course, I'm hoping, the price is going to come back here, maybe find some support and move up even higher, considering this move up. However, it came back and took me out of 15 ticks. Anyway, so that's it there. Price got turned around at this point in time. Now, there's a couple of areas that you could have gotten in. Now we're looking at what am I thinking as far as the next measured move is concerned. Now, today was the DOE report. And because the DOE report is today, it will have a tendency to, I'm not really keen on getting in too close to the bottom. Now, let me take a look at a couple of things here. First of all, when price does make a pullback this area, that's my first leg up. So I'm considering this from it. Now you can have a measured move within a measured move. And so this is the first leg up. Price pulls back. First pullback here. Second pullback down to this area. And so I was looking at off of here, there'd be another measured move. Look what happened where price really got to at this area. Now, what's the purple box? The purple box constitutes where the boundaries of where the DOE report was going to come out. So the DOE report typically, just before 10 o'clock, I don't initiate any new trades unless it's a really vibrant signal. In this case, there was no reason to get in. Or, if I was still in a trade, I would leave it run. In this case, price comes to this level. Now, let me make this a little larger so you can see this. So we've got this channel that we've drawn in off these first few swings, typically off the close. We had a break of this channel. We had a failure to a new low. And if you look at it from this is the first push down for the new low, pulls back, attempts to go down again, an immediate failure, and a place to go long right here. Now, we've already broken this channel. We didn't quite get a test to a new low, but if you're going to get in, your 15-tick stop box, you have to have your stop below the most recent price action. So that's why I showed this trade from that perspective. Price comes up, breaks through this. Now you get this channel working up through this area. You get the bottom of the line. I don't know if it's going to actually move, how far it's going to move up, but I've got this double top or this single top right up here as a potential target. And the potential target is because this is where this hesitation happened on the way down. In fact, this was also like a measured move. Price comes down to this area. We have a pullback, and it fails out of here. And you can see it very close to these bottoms. So if you're looking at shorting this area, which I wasn't, but if you're looking at shorting, this would be a natural target for you to short if it comes back to short to this area. Now, why wasn't this trade a trade to take? It's a pretty strong bar. The reason is that we're pretty close to this bottom, this double bottom on this side. And if that's the case, that really you're looking at targets of being double tops or double bottoms, but we're also, or these turnarounds, twin towers, let's call them, twin towers, or these areas where price comes down, comes back up, as well as where previous highs or lows are, current highs and lows are, and the previous day and the areas where we've had revisited as far as the tight trading range is concerned. So those are the areas that we're looking at. In this case, going along here, where would my target be? Well, my target from this bottom is, after it completes, is here, the most recent target, at this level right here. These two bars here, that's where my target would be. So do I have enough room to get out? Well, I have more than 15 ticks. If I'm going to get out here, this is where the target is to the left side of the chart. Ultimately, you're thinking that maybe we'll retest this area, which in fact that's what happened. Now, why would I do this trade here? We see another opportunity again. Price pulls back the first time, pulls back the second time, and springs right out of here. It takes strong buying to come out of here. It closes almost on its high, despite the fact that it went down here the first time. And if you look on a lower time frame, this is the double bottom, or this is where price gone up and sprung right out of here. Your stop is below this price action. Now, it's not below here. Ultimately, if you really are aggressive, you put a stop down to here and try to limit it with your stop below this area. However, I think this is good enough. It's a pretty decent looking trade from that perspective. You've got room to get out to these tops right here. And if you see it, right, you can see what happened here. Price came up, and you would have filled out. Now, if you're in this trade, this is where the DOE report comes up. Anytime price pulls back, and this is where we're using a conglomeration of our setup structure or looking at your second entries. This is a first pullback fails, and the second pullback down to the EMA and down to this bottom of this channel. If we look at this one, we say a pullback to here. Price fails back up to here, and it pulls back again. Now, it's a little choppy. It's also the fact that this pullback isn't quite as high as this one, but by the same time, it did pull back enough. When price gets down in this area, you can see that this was a bit of a trap. Sellers thinking they're going to go short, and they immediately got caught on the wrong side of this trade, didn't break the EMA, and you can see this, it gathered this up very, very quickly. Anytime that price comes back to the EMA or comes back to the channel, that's when you're looking at getting it. Now, this is during the DOE report, and you can see that the stretch from here, looking for this measured move, from up to here to this area, that's a pretty decent, we're looking at a good move from here. Even at this one, we see a first pullback this area. Well, this is a first pullback, second pullback, and then it pulls ahead a bit, pulls back again, and these two areas to get in, again, this is within the DOE report. I'm just marking these trades off so you can see that. It was a rare day today, and the rare day today is that typically when you have a news-driven report like the DOE report, price doesn't typically respond like this. The price action is usually you might have a quick bounce up at the announcement, but for whatever reason, price went up fairly consistently till about 11 o'clock, and then pulled all the way back down almost to where it started out. So it was like a big range. Price moved up, price moved all the way back down. Again, at these top, we had a tight trading range at this top, and anytime price pulled back here, that you would look at going long. Again, this is because of the DOA report. I didn't take these trades because of the fact that it was during that time that we had this. But I wanted to show this that on a regular day, you would take these kinds of trades every time. Short up the top here, and the reason the short is right here, didn't mark it, but I mean, we've got at the top of this tight trading range, and this was essentially, you could take a look at a short here. And then on the way down, let's take a look at our targets. So price moves down to here. We have a pullback to this area. You can see is a pretty decent measured move from here. Another measured move to here. We have price pull back to this area, rejection. I retested this area, went a little further. Price pulled back down to here. Breaks this trend channel, first pullback, second pullback again. And you can see, oops, moves down to this area, and then we have these turnaround in this area as well. So that's what I've talked about. So what did I look for? We looked for, had a brief explanation of trends. We talked about this last time, but the types of entry, stop entry or limit entry, you can see this on the screencast here. And we've talked about brief targets and measured moves. And that's it for now. See you again.